Congratulations to all the Aritzia investors. Hooray! Aritzia had blowout earnings. I want to cover the latest highlights from Aritzia's earnings. I also want to cover my outlook for Aritzia, and most importantly, I want to cover the future outlook in the upcoming years for Aritzia, because I really think Wall Street analysts are underestimating Aritzia. So if you are an aspiring investor, or you are already an Aritzia investor, or you just love everything about Aritzia, then you definitely want to check out today's video. Hey everyone, it's Tracy here. I'm a former engineer that's now a full-time investor managing a multi-million-dollar investment portfolio. I want to help as many people as possible to take financial control of their lives. If you want to learn more about stock investing, real estate investing, so that you can ultimately design your best life, then you definitely want to hit that subscribe button and that bell notification button so you get the latest and greatest videos coming to you every single week. So let's get back with the video. I go through Aritzia's Q3 earnings. All I see is these three things: growing revenue, growing earnings, and growing cash flow, which is like music to my ears, which is like blowing up. Aritzia is seriously unstoppable. And this cash flow, one indicator that I'm really focusing on, zoning in on, is going to play a big role later on in the video. So you definitely want to watch this entire video. Now, one thing I really love as I was going through the investors' presentations is discussion on operating leverage. This is so important. In fact, this is going to be one of the things I really zone in also later on in the video. So one thing is they're focusing on revenue growth, on managing expenses, so keeping it a lean machine. They're also really trying to enhance profitability, and lastly, generate free cash flow, a lot of free cash flow. So bottom line is Aritzia wants to keep their fixed costs low so that they can leverage their existing infrastructure, being their flagship stores, their digital online sales, so that they could scale their products, meaning sell more product lines to all of us, and then increase their revenue, increase their profit, and of course, increase their cash flow, which is amazing. Now, of course, just because they say that in the investors' presentations doesn't mean that's actually happening. That's why I drilled down in the financials, and this is what I'm seeing. Now, the first one is cost of goods are going down. So just in case you don't know what cost of goods are, cost of goods is essentially how much does it cost to get all their clothing, being the textiles, their buttons, their zippers, whatever. Basically, what it takes to make their clothing is called cost of goods. Now, their cost of goods over time has been going down, which means profits are going up potentially. Second one, their SG&A, which is selling, general, and administration, which is essentially like employee expenses, marketing expenses, are also going down. So what does that mean? That means increasing profit margins, which is like, hooray! Now, one caveat to the SG&A costs. I did notice in their reports that they did talk about subsidies during the pandemic. So it could mean that some of their expenses, like their employees' expenses, are a little bit artificially low because they are collecting subsidies. So this is something that I'll be tracking later on. But at the same time, a lot of their sales have been online, which means that it makes sense their SG&A costs would be going down, because if it's digital sales, you'll need less employees. So that's why the SG&A costs are also going down. Number three, free cash flow. Now, this has been super surprising. I can't believe how amazing they are doing in this front. Okay, free cash flow is basically after they generate all the revenue, well, after paying all the expenses and taxes, well, at the end of the day, you have to figure out how much cash you are keeping, okay? If the company is generating enough free cash flow, well, they can make more acquisitions, they could buy back their shares. Maybe in the future, they can even issue dividends to shareholders. Not that I want Aritzia to do that right now, because that means they're probably having a hard time growing because they don't know what to do with their cash. So besides that, all I'm trying to get at is having a lot of free cash flow is great for a company, especially if they want to continue to grow, because they can do whatever they want with free cash flow, and their free cash flow is exceptionally growing. So I think in the future, Aritzia could be capital compounders, meaning that they're going to be a cash cow. And I'll explain why a little bit later in the video. Now, my story with Aritzia goes all the way back to the late 1990s when I was 22 years old and I was sporting this cool white puffer jacket. Now, I was so impressed with this jacket because it actually fit me. Because back in that time, I had a hard time finding a jacket that was cool and small enough to fit me and bear the winter cold. So now fast forward to now 2022, and now we have the likes of Meghan Markle, we have J-Lo, they're all wearing Aritzia's line. Got J-Lo sporting these puffer jacket. We've got Meghan Markle just wearing everyday wear, bits and pieces of Aritzia clothing line. We've got so many celebrities just wearing Aritzia clothing as day-to-day wear. So all to say, given all the competition that we're facing right now with fast fashion, Aritzia has like totally killed it with its cult-like following and surviving and thriving through decades of fashion changes. Now, did you notice that Aritzia has strategically curated different brands for different demographics, such that they have a lower end mainstream brand like the TNA brand, but as you owning more Aritzia clothing like the TNA brand, and as you grow in your career and make more money, then you could afford the more expensive lines in Aritzia because they have a cult-like following. Now, I know some of you are thinking that Aritzia has been pumped up recently because of celebrities that have been wearing their super puffer jackets like the likes of Meghan Markle, J.Lo, Justin Bieber. So how do you know if this trend is going to continue on? Good question, and here's my outlook. So did you know a lot of the management team in Aritzia has started out as a sales advisor, okay? For example, Jennifer Wong, which is the president of Aritzia, started out as a style advisor in 1987. This is not just one example. There's a lot of examples where a lot of the team in Aritzia, their management team, actually started from the ground. And because of their in-depth knowledge of Aritzia and knowing the needs of their customers, I think this is one of their secret sauce for being able to survive and thrive through decades. And one thing I can say is that Aritzia actually did super well during the pandemic because of their e-commerce sales, even when their stores were closed during that entire time, which just shows their massive agility and execution. So all I can say is their outlook in the near future is looking very, very bright. Now, as full disclosure, I am an Aritzia investor. I do share my thoughts and opinions on the Aritzia stock as a Aritzia investor, but please, this is all for entertainment purposes only. Please do not take this video as financial advice. If you want to invest in Aritzia, please conduct your own due diligence and your own research. Don't take this video as financial advice. Now, before I jump into my future outlook for Aritzia's stock price, I want to highlight one thing, and that is the Wall Street analysts are completely underestimating Aritzia. In fact, they've been underestimating Aritzia since initial public offering. Aritzia has actually been undervalued for years, from 2016 to 2018, even 2019. It's been severely undervalued. And that's why in the last couple of years, Aritzia has finally exploded and surged back up to what I believe is the fair value of Aritzia stock. Right now on Yahoo Finance, the analysts are underestimating 2022 revenue for Aritzia, even though we've only got one more quarter before 2022 ends. And they're also underestimating the revenue for 2023, which means it translates that they're also underestimating the earnings per share estimates for Aritzia for 2022, 2023, and 2024. Given the CEO's recent outlook, which is like $1.42 to $1.45 billion of revenue for 2022, and given that their cost of goods are going down, they're becoming more efficient, their profit margins are increasing, I believe that the EPS estimates right now from the analysts are completely underestimated. If using just a regular growth rate of 20% to 25% year-over-year growth just in US alone, and just a little bit of growth in the Canadian market, and the regular digital growth that they're experiencing in the last 5 years, which is a compound annual growth rate of 36%, I can see the earnings per share estimates in the very near future actually growing to reasonable forward PE ranges. Historically, Aritzia has been trading around in the low 20s to mid 20s for its PE ratio. If I use my revised earnings per share estimates for 2022, 2023, 2024, its forward PE is dropping actually to reasonable ranges, which means Aritzia is actually fairly valued. Given that the CEO has stressed that they're going to grow specifically in the US with more and more stores, and they've already said that they're going to grow 7 to 8 stores in 2023, with most of them in the US. And given that the US growth is like much faster than the Canadian market, and given the fact that Aritzia already makes up 2% of women's apparel in the Canadian market, it's not far-fetched to believe that Aritzia can take up a much bigger market share in the US. In fact, Lululemon already has surpassed 2% market share of a women's apparel, and US market is 10 times bigger than the Canadian market. So I believe Aritzia could definitely 2x in the upcoming years because of the massive US growth opportunity. Just like when Lululemon was in its newborn stages, back when Lululemon was trying to grow in the US market. One last thing, Aritzia is on the path to become a cash cow. Remember in its investors presentations how they were really zoning in on cash flow growth, well actually revenue growth, increasing profitability, decreasing their expenses, increasing their cash flow so that they got this massive operating leverage because they're going to grow more of the product lines online with like lingerie, with shoes, with more product offerings. That means their profit margins are going to increase because, well, there's just less overhead. So over time, Aritzia could be a massive capital compounder. I've already seen signs of it in its latest quarterly earnings where their cash flow was ginormous relative to its revenue. I am so happy that it is in the small cap stage, meaning it's still in its baby stage, and that its big sister, Lululemon, has really carved a roadmap for its little sister, Aritzia. Now, even though they're completely two different lines, you could see what happened to Lululemon over the past decade. And I feel that I'm not saying Aritzia is going to grow just as big as Lululemon, but if Aritzia can gain half the market share of Lululemon, well, the future is looking very, very bright for Aritzia for the next decade. So what do you think of Aritzia's outlook? Do you think they're going to smash it in the US in the upcoming years? Let me know in the comments below. And by the way, if you're looking for an inflation and recession-proof undervalued growth stock, you might want to check out this video out here. If you are looking to build massive wealth in 2022, then definitely check out this video up here. I'll see you in the next video.